following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
All right, we are back. Let's talk futures. Special guest coming back for the second time. Nick Howard is joining us. Nick is the CEO, owner, architect of QuikStrike from the Bantix Corporation. How are you, Nick?
What's up, fellas? Thanks for having me back. Honored to get another invite. Really appreciate that.
No, I got to tell you, Nick. I mean, I'm so impressed with QuikStrike in general. It's adopted in the CME website. I mean, this is how awesome these tools are, and I think they're great.
Yeah, we've been a long road to get there, but yeah, the tools have gotten some nice traction over at the CME. And in the free ones, people seem to be very satisfied with the free ones, but when they recognize what the professional edition tools provide, I think they're generally pleasantly surprised.
Well, I am. I've been using it, as you know. You gave me a comp version of it, which I appreciate. So I'm logging in and using it, getting better at it. I come from a futures trading background, not an option trading background, but these two instruments, they are married together, and it gives us clues on what market participants are thinking.
Right. Yeah. With that in mind, I thought, like, I wasn't exactly sure what you guys were thinking in terms of, looking at the tool and stuff like that. But, I do feel like there's probably some tools that, people that are primarily futures traders might be able to use. Right. So I'm glad to sort of run through that really quickly. And again, you guys, have to understand, like, my days are not spent trading. They're kind of spent, developing the tools or, talking to the guys through how we want things to look in the different products that we're developing. So my trading experience is, from the past, but I'm not like actively trading the futures or the futures options. I'm more in the equity options a little bit more positionally, but I do have an opinion on how I think the futures traders should use the tools, and also some ways to potentially use options to help their futures trading, not so much from a standpoint of taking a position, but using them to help you coordinate your margin or lower your margin and stuff like that, and learn a little bit about gamma and participate in the options market and with gamma in mind, and then using that to trade your futures more actively and with a little bit of a mission as well. So glad to speak to all those things.
Okay, awesome. So, but just for the viewers who maybe didn't see you last time, what point in your career did the light bulb go off on the top of your head and say, all right, we can make some software that handles this kind of stuff. Let's do it. When did that happen?
Yeah, so like I mentioned, I was in the Eurodollar options pit for O'Connor and Associates back in the early to late 90s. Left the floor in 1998, but I was a programmer prior to coming on, and I was still a new guy on the floor, so I was just trying to make some money, and I had people who knew that I had that background, and they started asking me to make some tools, and I built them, and the light bulb came on, I think, when I recognized that there weren't a lot of things out there for people, and people were asking for them. So I felt like at that point, I keep my skills. That my skills are gone now from the programming side, probably, but at the time they were very good. So I just kept them up and tried to learn as much as I could from both the floor and sort of how to apply that domain knowledge in a practical way.
No, I've never had any skills in the programming. Back in college, back in the day, it was Fortran.
yeah, Fortran. That was my first language. In high school, we had a PDP-8, and we all learned Fortran back. I remember we had to come to class early because that was not a regular class. But Yeah, it's a great skill to have, regardless of what you do on a regular basis. It's just very helpful from a thinking standpoint. But it's served us pretty well. I'm nowhere near what I used to be in that respect, but I still kind of conceptually am pretty good.
Yeah. Well, we had punch cards back
Yeah,
then.
yeah,
To feed them into a machine. There was no, GUI where you could just type. Crazy.
yeah. It's come a long way. It's actually much. I don't know. You really had to dig in the weeds back then. Now you still have to, but a lot of stuff is sort of pre-configured, and now with the chat GPT does a lot of coding for people. So I don't know how much I would like it now as much as I liked it back then.
Yeah. All right. Well, let's take a peek at if we can, let's take a peek at QuikStrike, talk about Gamma and all that other stuff. And now again, let's walk through this in the lens that we might have some new viewers here that weren't with us last time.
Sure. I heard you guys talking about microcrude, so I sort of set that up as the product that we could walk through and take a look at a few things. But so QuikStrike just set up. It's the free version and the paid version are set up very similarly from a menu standpoint. Again, the menus are supposed to be named so they're representative of information that you're going to see as you're walking through. So right now we're looking at the dashboard, and it's giving you a summary of the benchmark products that the CME has to offer. And as I mentioned, we do primarily CME, some Eurex, some ICE, some MJEX, stuff like that. But the bulk of the products and the liquidity, in this futures options market is coming from these products. So again, as you use and as you walk through, you'll be able to sort of decipher the information that you're going to find as you click through the menu items. So we do have, although anybody who's trading futures is going to have their own sort of futures charting and that type of thing, but we do give you access to charts and spread charts and stuff like that. So it's just a little bit easier. So there's all the all the spreads for the micro crude. So we try to put a lot of things in front of you so you can, use it a little bit more actively, and you don't have to jump back and forth when you're doing options and you're doing futures, right? So again, if you just sort of walk across, if you're trading futures, here you go, charts, everything like that. You also have access to, some, if you're looking to see, something about history and the volume and OI contracts, that's going to exist in here as well. And then, sort of opportunity to look at what's going on in the broader market. You can look at the block trades for a particular product. Now, there's going to be no micros here yet that are trading, but if you're trading the bigger contracts, you're going to see that that's also available. Now, where I would probably, and you guys like punch me because you know how it gets when I start talking about QuikStrike, lose all track of time. And let's see what we got here.
So Nick, if it's not too much trouble, we're in the micro crude right now. Could we just toggle to the regular crude?
We certainly can, because micro crude, I'm seeing some issues with that OI. So I'm gonna.
And you're not going to have as much data. I think you'll have more data in there you go.
No, for sure. Here we go. So here's our main look at the regular crude. And what I'm going to do is I'm going to set this up. Again, I'll mention, I'll throw it out there. If you get to the point where you're using QuikStrike, whether it be the free or the professional editions, there's a lot of buttons and drop downs and stuff like that. Use those because it helps you configure the screen and get information a little bit more quickly. So what I'm going to do is I'm going to look at, as I pull up the options contract, I'm going to look at the top 10. Let's do the top 10 for open interest, right? So it gives us a nice little look at cross product. So
okay, so what you just did was you filtered, so you want to see the top 10 in open interest for those particular option strikes.
No, yeah, for that, that's what it's going to be here, right? So the open interest and options info tools are set up to have sort of a product overview and then the individual tabs like the rest of the tools. So in this case, regardless of the fact that I chose just 10, when I'm on a product level, look, in many of the tools, you're going to see the whole perspective of the market, right? So in this case, we're looking at the entire turn structure of the options contracts, right? And you're going to see here that the biggest open interest is in the D's contract, as you would expect, right? And you can see there's little bits and pieces across and into the weeklies as well, right? The weeklies are a big push right now for the CME. To make it, and there's Monday, Tuesday, Wednesday, Thursday, and Friday, right? So you have every day of the week now. And they used to have dailies, but these I think are much more reasonable structure for the product. It's easier for people to understand. So
But so we're used to thinking, back in the day, right? We're used to thinking in terms of put call ratios, right? And now we're seeing these colored bars here, which basically show the call open interest and the put open interest in the color based format.
Correct. Right. So yeah, in QuikStrike, you're going to see calls are blue and puts are this amber color, and it gives you a nice idea, right? So you also see in the chart itself, we have a put call ratio up here across the entire spectrum of 1.31. So puts divided by calls is is going to give you that number.
Yeah.
So you see here, I have the volume ratio, sorry, there, and then the put call ratio from open interest is going to be over here. So you got put call OI put call ratio and volume put call ratio. I kind of threw myself off for a minute because I'm like, I know there's bigger blue bars than there are yellow. Why am I getting
right?
So yeah. So from a standpoint of a futures trader, this might be of interest from looking at like, hey, what's the liquid contract, right? So immediately you're going to look at the open interest on and you guys are going to know this based on the fact that you're trading that product, but also gives you a good idea of where the action is in the options underlying. Another view from this, so we're looking at the term structure, we're looking at the aggregate of the puts and calls in each of those months. But up here above the chart, I can change my view from looking at it by term structure to by strike. So now I start to be able to see, hey, where are some of the bigger open interest positions in these options contracts, right? So I'm going to zoom in. So it's giving me a pretty wide perspective, right? Because it's going to load up every strike that exists across all expirations. But I can zoom in by clicking down on the mouse and dragging across the screen. This exists for all charts on QuikStrike. But now what I could start to look at in a way that the way that I like to think or use open interest in particular, if I wish I was thinking this way more actively back in the 90s when I was scalping gamma for the position and stuff like that. But what you can start to look at here is, where some of this support and resistance might be within the market. Yeah. I don't know. Do you guys pay attention to this at all when you start to look at where your in and out points are?
Yeah. I use this phrase areas of interest, right? And whether I'm looking at a pivot on a chart or a fib line, or I'm looking at this particular view here. I'm looking at these volume spikes that we're seeing here on the quick chart, and these are areas of interest to me, right? And sometimes they act like magnets. Sometimes you write this down, you put it on you put it in your memory. It's like, all right, today we have an unusually large amount of calls at 70, right? And then they could help frame your bias for whatever time frame you're looking to trade.
Right. So in this case, on the bottom we have the volume from end of day volume from yesterday. On the top chart we have the total open interest in the individual strikes. So when I start to look at this chart from a futures range standpoint, right, where we're currently trading around 73, I start to naturally think, hey, we got some support at 70. We have a little bit of resistance maybe at 75, but our big resistance here is at 80. So when I'm starting to look from a very practical options strike perspective, and I maybe want to think about doing a strangle, my natural reaction is going to be to try to focus on maybe the 70 and 80 strikes, right? And for a futures trader, as you start to, look at what levels these are, to your point, where you're using the different technicals that you have on the futures chart, you can start to come in here and say, well, where do I really have to look, right? Because what happens at these bigger strikes, right? That's where people kick in to start having to hedge their position, whether they're long or short gamma and stuff like that. So it becomes a natural place to look. And, and I always sort of kind of drive it in there. It gives me a nice perspective of, okay, where do I think I have to pay attention? So I thought that was something that you
guys... up until today, I was talking with Jimmy Iori. I don't know if you know Jimmy. A couple days ago, I was talking to him, and we were talking about the possibility of $70 oil. I think the recent low is like 71.63 or something like that on the front month. And so you can see here, we're not the only ones thinking 70, right? I mean, there's quite a spike there.
Right. There's a reason for that, right? And you don't know. The unfortunate part of this is unless you really got to have watched and seen how this open interest has developed over the course of time, right? You don't know whether you think that's, positioning for people selling at puts buy. I mean, there's always a buyer and a seller on each side, but yeah, this is a natural thing. You get towards that strike, you have to start evaluating your position, because as most of you probably know, as you move toward a strike, your gamma is going to increase, right? Which means you're going to be either going to have to buy futures because you're a long gamma, or you're going to have to sell futures because you're short gamma, right? So, and in each case, you might welcome, regardless of the side that you're on. But in each case, this decision has to start to be made based on as you approach these bigger positions.
Yeah. And you also don't know how much of this is hedging, especially in a commodity market versus speculation, right? Or just, basic or spread trades or whatever. You really don't know that either. That's why I kind of, in my mind, I'm like, all right, here's an area of interest, regardless of what it is, it's an important level.
Right. I actually like that term quite a bit, right? Because you're giving it enough import to make people pay attention, but you're not saying, hey, this is a dead set place that you gotta do something in particular, right? So area of interest is, I think, a great term, because it's enough to raise your eyebrows, but not so much to put your chips on the table and say you're all in, right? So in any case, this is a useful tool, I think, as well. And you can walk down this tool, and here you're going to see OI change. You start to see some increase here in this is an increase. You can see where the increases in the underlying option contracts are occurring as well. One other thing.
Wait. Let's go slow. Walk me through this a little bit.
Okay, so this is so I went from open interest to open interest change. So this tells me there was an increase of 8,611 in the put in the November contracts in the put position. So there's 8,600 new positions that opened, right? So you can start to see where people are actively engaging the market again from what expirations, what time frames are of interest, right? So we had a bigger spike in the March 25 contract, in the deck, right? And then also in the NOV. So, right, we're getting into the fourth quarter. You're going to start to see those non-calendar, the calendars, the quarterly months aren't as, sort of prominent as they are in, say, like the E-mini and stuff like that, and the Eurodollar, or formerly the Eurodollars, and those kind of things. You're going to see more activity in these non-quarterly months. But this is always a good way to see where people are starting to think from a time frame standpoint, right? What's the possibility of some action occurring in those particular months? And you also might be getting people that are rolling from one contract month to the next. So,
but does it also talk about, does it also suggest a change in sentiment or an increasing sentiment?
Yeah, I mean, I think it definitely can, right? I'll use your term back at you. It's an area of interest, right? I think that it's something that you got to pay attention and what you probably should look at. So let's investigate this a little further. And I want to say this really quickly to the people who are hopefully still there. The tool that I'm focusing on today, this is part of the free set, right? So everything I'm showing you is available for free at cmegroup.com/QuikStrike no C. Okay, and you can get the tool embedded in the site itself there, or you can log on and register for QuikStrike Essentials. So everything I'm showing you here is there and available for everyone, right? So I think that's really important that people understand that. But let's jump in. Let's investigate a little bit further. So I'm on OI change, but I can jump. I'm on the November contract, right? I could see down on the bottom November contract. So let's jump over to this November contract specifically. So now we can see, if we zoom in, we can see where the open interest jumped. So we had a jump in 58 strike, which is pretty interesting, right? When you think about things that way. So we had a big jump in the November. Let's walk over to the December and see what happened there. And again, we have a little bit of a downside here. So in this case, we had a bigger jump in the 60 put. And let's go over to the March 25 contract. So now we can see where that spike is, right? And again, look at this, we go into the 40, right? So we went from sort of this product level look, right? And see, so we can investigate a little bit more deeply. And when I start to see, just from a practical trader side of me, when I start to see those sort of wide, those strikes are pretty far away, right? You have to wonder, what people are doing or how they're getting into those positions. Were they part of a spread? Were they part of a strip? Those kind of things, right? But again, and I'm going to use it now. I'm going to overuse it, but I will continue to give you credit. It's an area of interest that I think is
but also what you just did, it kind of helps with developing a longer term bias, right? So, all right, here's what it is today. And now you were all the way to March 2025, right? So, how does that evolve over time, right? So you can kind of see that evolution.
Right, for sure. And I think, and I'm going to jump here and take a look. We have under the history, we have an OI and volume tab as well. Mm-hmm. This may or may not be, I don't recall if we put this out into the free version, but what you can do here is I'm looking at open interest across the entire crude complex, but I could go out there and look at a particular strike, okay? See how that has played out in terms of where those OI jumps occurred, right? Because that's also important. You see a big OI number, the OI change, you're going to recognize that day because that's what you're looking at. But what you want to be able to see is over time, you want to be able to look at, how the product itself has run. And this is a big query. I apologize because we're going back far, so I should probably not have done the year. But what you're also going to be able to do as so here we go. So now we can see how an individual strike has changed. Okay. So let's jump off let's go to our November contract and take a look at that. And then let's go to the strike that just traded. We said it was the 58, I believe. We could look at the 58.
So am I looking at like a moving kind of put call ratio?
No, what you're going to see here, what I did is I went to an OI, I went to the history tab for OI and volume. Okay. And what I'm able to do when I was on the product level tab, it's kind of showed me just the running history of open interest over the course of time of everything. So you looked at the puts and the calls, they stack them. And then I think we also plot the ratio there. What I wanted to show here was by us investigating that OI change in the one chart up here in the OI change chart, we're able to see, hey, November had a spike. Let's take a look at it. We dove into November. We knew that it was a 58 strike. And then we came to this history. And I say, well, let's see how this OI compared to the OI that existed there before. And now you see we went from a prior OI of, 1100 to, an OI of 76. So we have 7 times the OI increase just day over day, right? So these are the type of, and again, this is an active participation here. You kind of go and look and you have to do a little investigation, but at least it gives you an idea of what's going on. Let's take a look at the DC because I think that one, and let's take a look at the 60, I believe is what we looked at. Let's see how that's, and there you go. We had a spike in OI, but we didn't have that big of a, it's already kind of existed there from a OI potential standpoint. So I know we're getting close.
Yeah, but no, you know what? I got a couple questions from the crowd actually.
Sure, absolutely.
And I don't remember the answer to this question, but I think the answer is yes. Crypto Jan says, does this tool pull some of the open interest data from the commitment of trader reports?
Sure. So what I can show you, and because of the way I'm sharing, I can just show you. It won't show a pop-up, but if you go to more tools, there's a COT report. Okay. So the COT report is a report on the positions in the market, right? So it's all baked in as part of it, right? So, but the COT report is going to give you a different breakdown of where all these futures positions are coming from, right? So we don't necessarily put it within the OI of the tool itself, but we have the report that's available. So you can go in there and see, how much of the producers, how much of the distributors, that kind of thing. So yes, COT report, again, that's another one that's free and available and out there. And it also tracks what's going on in the micro positions as well.
And I can see on that drop-down menu there, we have the Fed Funds tool, the favorite Fed Funds tool. I log into that every morning.
Yeah, FedWatch tools has been super, super popular. I mean, literally millions of hits in months where, when it was crazy a while back, they were getting, 3.5 million hits a month. It was nuts. So, and still getting pretty good hits because it's so active. It's nice to see it. It's been really getting a lot of enhancements lately. So if you haven't taken a look at that lately, you should sort of dive in because they're giving you some tools to sort of do your own sort of analyses, if you'd like, and also a little bit more expanded view of some of the probability tables as well. So it's all there. It's as deep as you want to go. So we probably butted up right against it, but what I do want to talk about at some point, and I'm just going to allude to it here. I'm going to jump off real quick, and you're going to, like I said, just give me a shot when it's time to go. What I do eventually want to talk about is and this again is in the professional, under options info, there is what I'm going to call trade ideas here, and there's a break evens tab. So what's interesting about this, I'll give sort of the 30-second nutshell. What I'm going to do is I'm going to limit this to
Nick, take your time. We've got time.
Okay, I'm going to do a less than 30 days here. I'm going to just, because I think that's what's important. So here we only got let me go to the product here. So this table looks crazy, right? It's just a bunch of numbers, but the point of this table is the following, okay? What's important in this table is the puts are important on the downside, and the calls are what's important on the upside. We show everything because, you should show everything. Now that I look at it, I'm going to color these a little bit differently because I think will show a bit better. But what these are meant to represent, these numbers represent. So let's look at something a little bit further out, or it doesn't really matter. I only think this is relevant for short dated stuff because it's the window's smaller.
Short dated meaning daily up to a weekly.
Yeah, you can start to even think, like I did 30 because I think 30 is where most people are looking these days in terms of the trade, right? If you look at all of the OI from equity market to this stuff, everything is sort of pushed forward, right? I mean, this is a little different because there's a longer term perspective on this, but the idea behind this is, and I'm going to click on one to show you what it means. So from a futures person's perspective, right, this is how I think about it. So right now, I'm on the put column here right now. If I bought the 4 days to expiration ML4 contract and I hedged it, okay, the market would have to move $1.22 higher in order for me to break even on my purchase of that put. Okay, so why do I? And so I'm going to click. No, you're not going to be able. You can't see that, can you?
No, that's okay.
Oh yeah, I would have to reshare. So the point behind that is if we get a chance on the next time we could start here. The point behind it is what you can do is you can use cheap options to buy positions in futures, and then given that you're a futures trader, your expertise is kind of knowing when I hit a lower bound or when I hit an upper bound or whether I think we're oversold or whether I think we're overbought. So what you can, on the downside, what you could start to do is you could buy puts and buy futures. And if you think that there's a bounce there, so now you can use your options position to get a little bit better placement on the margin, right? Because you have a hedge position. And on the upside, it's opposite. If you think you're overbought, you can, and it depends on the market. Sometimes you rally, those call options get hit from a volatility standpoint, right? So they get cheap. So what you can do is you can buy cheap call, you can hedge them. And then if you have an expectation that the market's going to move back down, it's just like I call them mini straddles, right? So when you buy a straddle, you expect you want the market to move one way or another. When you do a mini straddle, you kind of your desire is for the market to kind of move back where it came from, right? Because I can show you, let's take a quick look if I can here. Let's just do something silly here. Let's do a regular straddle. Right. So you expect you want the market to go back and forth, but what's going to happen on the mini straddle, your break even is going to be really, really tight. Right. So that's kind of a place I would like to, given the opportunity, like to spend some time so we could start talking about that as well.
No, we'll pick it up next time right here. This is awesome. I mean, I haven't explored that deep yet into the software. I apologize, to be honest with you, but that's
a hidden one. There's I mean, a lot of people, most people find things when I introduce them to them, or if they're, that's not, We don't do a great job of explaining every detail about the tools. We just sort of, we do a lot of training, but we don't do a lot of visual explaining on the tool itself. So
no, that's all right. It's experimental, right? You're just new discoveries are made all the time. So
yeah, we hope so. We hope so.
Yeah. So anyway, well, listen, I appreciate.
Any other questions? I'm glad.
Well, yeah, no, we're up against time, Nick, but I appreciate you carving out this time. I know you're super busy day to day on this stuff. This is awesome software. So again, I appreciate your time being with us today.
No, always my pleasure. Glad to do it anytime. And like I said, anybody specific questions or want to reach out to me directly, NHOWARD@Bantix.com and Howard@Bantix.com. Feel free. Glad to talk.
Yeah, and I know you have a Twitter handle, but I think I might have found you on LinkedIn also. I'm not sure.
Yeah, QuikStrike 1 on Twitter, QuikStrike 1, and LinkedIn. You can just search for Nick Howard.
There's no C in Quick, guys.
No C in Quick, right?
Quick.
A clever decision, maybe regrettably at this point in 20 years later. Everybody misspells it, but I like it, so it's gonna stick.
No, it's good.
Yeah.
So one last thing. So if they want to take a peek at the professional tools, they would go to QuikStrike.net.
You can probably just go to Bantix.com and there'll be a registration up there, or you reach out to me directly and I can send you the link as well.
Yeah. And if all that fails, folks, you could reach out to me directly at learn@NinjaTrader.com and I'll put you together with Nick.
Yeah. Thank you for having me. I really appreciate it, man.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.